Today, we will talk about covered calls. A covered call is when an investor sells call options on an asset they already own to generate an income stream. The investor's long position in the asset is the cover because it means the seller can deliver the shares if the buyer of the call option chooses to exercise. Covered calls are a neutral strategy, often employed when an investor has a short-term neutral view of the asset and holds the asset long. They can earn income for their account while they wait out the lull. The maximum profit of a covered call is equivalent to the premium received for the options sold plus the potential upside in the stock between the current price and the strike price. The maximum loss is equivalent to the purchase price of the underlying stock less the premium received. An options writer can earn money by selling a covered call, but they lose the potential profits if the call goes into the money. If they do not have enough shares to provide if the call expires in the money, they must buy them on the open market, causing them to lose even more money. Covering calls can limit the maximum losses from an options transaction, but it also limits the possible profits. This makes them a useful strategy for institutional funds and traders because it allows them to quantify their maximum losses before entering into a position. Here are 5 key takeaways. 1. A covered call is a popular option strategy used to generate income in the form of options premiums. 2. Investors only expect a minor increase or decrease in the underlying stock price for the life of the option when they execute a covered call. 3. To execute a covered call, an investor holding a long position in an asset then writes, sells, call options on that same asset. 4. Covered calls are often employed by those who intend to hold the underlying stock for a long time but do not expect an appreciable price increase in the near term. 5. This strategy is ideal for investors who believe the underlying price will not move much over the near term. Hope this would help. Thanks for watching.